Thank you very much, Armando. First of all, it's great to see so many people turning up today. I think we have more or less seen a growing crowd every single year since we started this annual event. And it's obviously a testament to the growing interest in alternative data and more importantly to us in RavenPack. So that's great to see. As part of my presentation today, let me see that one. As part of my presentation today, well, first of all, actually, I wanted just to briefly mention what my role is at RavenPack. The team that I manage more or less sit as an internal client. So we don't really touch unstructured data, but we get all the analytics that also our clients receive. So our job is really to come up with interesting concepts on how to use the data, also just understanding our own data better, such that we can inspire or help our clients to navigate to some interesting results as quickly as possible, so we can get you guys to start paying us for the use of our data. So some of the things that I will address today is really some of the concepts that we are currently exploring in-house as part of the data science team. And I will, as part of that presentation, also just give a brief overview of what our data really looks like for those who haven't seen it already. You have obviously already heard a couple of presentations on our data, but you haven't really seen it, at least not the granular data. So I'll try to make sure to walk through some of the key attributes of our data sets. But I'll also talk about a couple of the concepts, as I mentioned, that we are currently exploring, both when it comes to thematic trading or creating complex events, as well as trying to trade on related entities. So similar to net, I'm also briefly going to explore some concepts within network analysis. And I will follow up with a couple of use cases there as well. And then finally, I'm going to also briefly talk about some of the future research that we are planning to do as part of my team. So what is it that RavenPack does? Well, we are in the business of turning large unstructured data sets into structured content that can more easily be consumed by computers. So you end up having something which is more computer readable. And in essence, what we are hoping to do is to bring in front of you data which is orthogonal to the data sets that you're already consuming, more fundamental data, etc. And in the end, we hope that you are able to find alpha and therefore, in the end, are all willing to share some of the profits that you are getting from our data with us. So what is it? How do we produce our data sets? What is it? What are the key attributes that we really focus on? Well, first of all, we are going out there and trying to get as much unstructured content as possible. For my presentation, most of my presentation, I will focus more on traditional newswire services and on web content. So there's some social media, some blogs, and so on out there as well. So we go out and we have something we call the full edition, which grabs more than 19,000 different sources, news sources globally. Both, can you say, the bigger newswires such as Dow Jones. We also have Wall Street Journal and so on in there. But there's also a bunch of local content which is gathered from the web via relationships with, for instance, LexisNexis, which have acquired moreover technologies. So we have a lot of unstructured content coming in. One of the first things that we do is really trying to identify entities. Originally, we started out identifying companies, but have in the more recent years moved beyond companies and are now also identifying places, organizations, currencies, and commodities, and that keeps on expanding into people, products and services, and so on, which is very exciting. And of course, it's one of the most important elements. So can we actually look at the news and figure out what to potentially trade on it? What entities does the news really relate to? That's obviously the first part for us to make any decisions beyond that point. And we have a quite sophisticated entity identification engine. And we basically deliver, we are point in time sensitive and so on. So Gillette will point to Gillette up until the point it gets acquired by Procter & Gamble. After that point, it's considered a brand or subsidiary of Procter & Gamble. So when you want to trade, you know that if there is news about Gillette, the stock that I have to trade is Procter & Gamble. So it's quite sophisticated engine there. And we will give you unique identifiers per entity. We will also give you a reference service such that you can map it into the universe that you have using QSIPs, ICE and CDOs, tickers, etc. So everything is pretty easy to get started, and that's obviously important. One of the other things which is also very important, or one of the key attributes or key selling points of the RavenPack dataset is really our event detection capabilities. And we work within a taxonomy, event taxonomy, where you can have different levels of granularity. And I'll talk a little bit more about that on the next slide. But one of the things that I tend to say is that where what brings most value is really that sentiment. A lot of people, when they think about news analytics, they think about sentiment. But sentiment will tell you perhaps something about direction and potential strength, but what it doesn't tell you about is decay. And here, event detection can help you to condition, on what's actually what the topic is, and you might have a better idea of how quickly that information gets incorporated into price. And the final area where we focus is, of course, in different kinds of scoring. So we do relevance scoring. How relevant is that particular entity in the story? There may be many entities mentioned, but they are not necessarily equally relevant. So we will give you an idea of what are the key entities in a particular news story. And there's been several research that have shown that using that as a filter is very important. We obviously also focus on sentiment, and that will obviously help you, as I mentioned before, about giving you information about potential direction and strength. But of course, again, it depends on your investment horizons and so on. So it may be that you will see that an initial reaction that moves with sentiment, but as you increase your investment horizons, you go into these overreaction, underreaction type of discussions. So you may see longer-term reversal or something like that. So how to trade on sentiment depends on your particular application. We also do novelty scoring. So of course, when you look at news and you look across many, many sources, there will be some sort of repetition. And again, depending on how you apply or use the data, you may want to be able to distinguish between what is new and novel and what is not. There may be information in knowing how much something is being covered across the different sources, but it may also be, especially if you trade on very short horizons, that you just want to trade off the most novel piece of news and then get rid of everything else. So this is what the data set looks like. We have many, many more columns. I've just kind of taken a sample of some of the more important analytics that also links into what I've just walked you through. So what you're seeing over here is, of course, a timestamp. We have archives going back to 2000 of millisecond timestamp data. So it's pretty rich, and you can do a lot of interesting modeling around that. We add on average about 250 milliseconds, so we're able to analyze the news faster than you're able to blink an eye. And one of the other things, of course, here you have the unique RavenPack identifiers. You have the taxonomy from least granular to most granular, and we cover about 2,000 different types of events across equities and global macro. And here's the different scoring with relevance, sentiment, and novelty scoring. If we take a little bit of a deeper look at the event taxonomy, of course, as I mentioned, we have different levels of granularity. And if we start looking at the topic level, which is the least granular, we cover 5 different topics. We cover anything from business news, economic news, political news, societal news, and environmental news. And that is quite useful to kind of also have that higher level categorization. One of the things that I tend to say when people ask me about, we want to have a aggregated sentiment score for the US economy. And I tend to reply and say, we don't really believe in just one score for the US. What we believe in is a number of dimensions that may be relevant at different times or for different asset classes. So for instance, if you look at equity indices, if that's what you want to predict, corporate news or news about individual companies is more important. And is the most important, and after that, economic news. If you want to trade Forex, you may want to focus more on economic news. If you want to trade commodities, well, in the long term, economic news is most important, but in the shorter term, political and societal news also has an impact. So it's not just about just picking one sentiment score that kind of can capture everything, and you can trade all instruments or asset classes based on that. You have to look at it from different dimensions and tailor it to what it is that you wish to do. You can, of course, go deeper or deeper into the taxonomy, and you get more and more granularity. And at the most granular level, where we have more than 2,000 different types of events, we're able to distinguish between the roles that companies may play in an event, or entities for that matter, more broadly, from a more broad point of view. So for instance, if you look at a lawsuit, we're able to distinguish between who's the plaintiff and who's the defendant in acquisition. We can tell you who's the acquirer and who's the acquiree. And that obviously lends itself to a lot of very interesting discussion, analysis or signals that could be constructed from that. But of course, as you go more and more granular, there's obviously a trade-off. And the trade-off is that you will have less liquidity. So there is you have to go through and figure out what is the right trade-off of going granular versus having enough data to test in order to get any statistically significant signals out of it. And it may be different depending on what level you want to work at, may depend on the particular event category that you're interested in. Some news is just more frequent than others. So of course your earnings, your analyst ratings news and so on is pretty frequent, so you can go very granular. Where executives getting fired, killed or kidnapped, it doesn't happen that often. Or fired perhaps, but not killed and kidnapped at least. So what is one of the, one of the advantages of having this taxonomy available? I've kind of already talked about it a little bit, but what's very nice is that you can treat news in a non-uniform fashion. It's not just sentiment, sentiment can be tagged with an event. And how you want to incorporate that into your model can be very, very different. And the event taxonomy is very useful for that. And as I already mentioned, especially when it comes to signal decay and being able to filter out noise, so it could be backwards looking events or forward looking events or events or things that are happening now and so on. The event taxonomy can help you there. So you may say, all of the news that talks about stock prices that have already moved, let's get rid of that. Or what about technical analysis? Well, it may be that it's generally positive. Someone is giving you a buy signal driven by technical analysis, but when I tested it, doesn't really work, so I want to get rid of that as well. So, and you can kind of do that with the taxonomy. And finally, and that's really one of the use cases that I'm going to talk about today, is that you can also take more of a thematic approach when you start aggregating data, coming up with indicators saying, okay, also at a company level, it's not just about what is the sentiment for IBM right now. No, IBM can have multiple dimensions or themes occurring at a given point in time. So I want to understand what is the earnings sentiment of IBM, what is the M&A sentiment of IBM right now, and so on. So you can get a more thematic approach to building strategies or building alpha streams that eventually you can combine into a super alpha in the end and have an overall opinion about IBM, but building it from a thematic point of view. So some of the things, now moving into some of the things that really interest us right now in the quant or data science team at RavenPack is that we like the idea, or we're working a lot with complex event processing, so trying to understand news in context of other things in order to help us clean the data. And that's one of the things Armando mentioned, it that in his talk, that just having more data doesn't mean that you will be able to get better signals out. You need to understand where the information really is, and trying to get rid of all the noise. And I think some of the ones that will be most successful in working with big data are the ones that are able to use multiple data sets to help clean the data. And we are, of course, focusing a little bit more on our own data, and we try to figure out ways of more complex ways of trying to clean our own data from a user point of view. So I'll talk a little bit about some of the concepts there. And the other thing that we're also looking at, of course, as you clean or as you filter on the data, you will reduce the number of potential trading signals. So one of the other ways, or one of the other things that we're interested in saying, okay, how can we also increase the number of trading signals? Now we're doing a lot of filtering, so we're reducing. How can we increase the number of trading signals? And that's where we start to move into more of the network analysis type of aspect of things. And we are doing a lot of research at the moment on supply chain and competitive landscape information, and seeing how news propagates through those type of networks. And we're also adding some of our own concepts on top, which we call news conventions. So what companies are mentioned in the news together, and can that help us to come up with more dynamic networks instead of just relying on the traditional supply chain and competitive landscape data that are typically extracted from regulatory filings. We can look at the news to figure out if companies are mentioned more together. Are they then perceived having a stronger relationship right now? We can also identify new and emerging relationships that haven't yet made it into the filings and so on. So there's a lot of interesting stuff going on there. One of the things, but jumping into one way of potentially cleaning data is that we can try and look at news or events from either on a timeline, so saying, okay, if we see this particular type of news, what can we expect to see next? But also in that same line of thought, there are certain types of event groups that lend itself very well to that type of thinking, where you can almost come up with a state diagram because you can expect them to occur in a particular timeline. And I'm particularly thinking of M&A and also lawsuits. So here we have tried to plot out the types of events that we cover for acquisitions within our taxonomy. And we cover anything from acquisition at the rumor stage, to rumor denied, to acquisition interest, to acquisition opposition, and so on. So different stages that you may think of that could describe an acquisition process. And of course, when you know something, we try to work with the concept of both relationship and company status. So what is the most advanced information we know about a company right now within a given theme or for a particular relationship? And that's really what this state diagram kind of feeds into that, and say, what is the most advanced information we know? Well, we might have seen that there's been an acquisition regulatory approval event. So that kind of helps us define what will we accept as future events that are detected for that particular company. So we have a set of plausible events following the most advanced information that we know. And of course, this becomes important as you are looking across 19,000 sources that may have different frequencies of publication. You may have weekly blogs or monthly magazines or whatever that are feeding in here. So some of the things that you are seeing may be may look as if it's new from a novelty perspective within a given time frame, but it's not really adding any additional information to what you already know. So kind of tracking the most advanced level can help you filter data and basically get rid of all the noisy previous event that you don't really want to look at. So we are doing a lot of stuff in that, a lot of work in this area. I also introduced the idea of co-mention networks and trading on related companies, as I mentioned before. And the objective here is, of course, to increase portfolio size, but also potentially to create orthogonal alpha. And we are seeing that if you trade, can you say, signals, any signal for that matter, across the supply chain or across a competitive landscape, you actually have fairly low correlation to your, can you say, original signal trading the company that has news itself. So it offers both some interesting orthogonal alpha as well as increasing the portfolio size, and I will show you a use case in a sec. Of course, there are different types of relationships. I've already mentioned them a few times: supply chain, competitive landscape, and co-mention volume. And we are trying to see if we can combine all of this information together to arrive at something which is more dynamic, and also potentially trying to expand the coverage of these existing databases. So, for instance, if you look at the traditional supply chain and competitive landscape information, that it tends to be stronger in the US. But perhaps it is possible to look at the news and try to use the existing databases as training sets and look at what type of news you see for suppliers and customers or competitors and try to perhaps infer relationships outside of what's already covered by these traditional databases. It may be a weaker link, but it may give you some edge. And those are also some of the areas that we are very interested in to look into. So let's take a look at a couple of simple use cases. So the first things that the two things that we will look at is, first of all, trying to take a thematic approach, as I introduced earlier on. So just focusing on news that relates to earnings and revenues and dividends in the RavenPack taxonomy. And we call that an earnings sentiment indicator. We look at some way of aggregating this information into an indicator. And the way that we do it is, in order to reduce noise, we basically look across the 108 different categories within that RavenPack has that kind of covers earnings, revenues, and dividends, and say, okay, let's only consider those categories that have actually given us positive performance in the past on the very short-term horizon. We're focusing just on 1 day for now to begin with. So let's get rid of all of the categories that didn't really perform as expected over a rolling window, dynamic window over time. We use two years in particular, but we have tested different kind of windows, and it's pretty robust to the window. So that's kind of step number one. And I will come back to that in a second in a little bit more detail. And then afterwards, after we have created our earnings sentiment signal, let's then try and take that and apply it to related entities in order to increase the trading opportunities. We are not initially looking at co-mention volume, but just looking at traditional supply chain and competitive landscape information. So how do we create our earnings sentiment indicator? As I mentioned, we look across the 108 different categories that we have in those groups. We stack them on a historical basis, evaluate the performance over a look-back window, and basically get rid of all of the ones that didn't perform. So out of the 108, we may reduce it down to, let's say, 40 categories that we consider in our indicator. So we have 40 categories left. We take the average sentiment across those, and that is just our very simple reading of our earnings sentiment score for that particular company. And that's basically what I show here, just a simple average sentiment score such that events, let's say guidance, gets more weight in the indicator than let's say earnings up or earnings down, simply because we have a more extreme sentiment score for that type of news. This is kind of what we get as a result. And I will walk you through it, of course. So we have created a long-short strategy, just going long positive sentiment stocks, short negative sentiment stocks, used a sentiment weighting function. We have applied a maximum allocation constraint of 5%, which may be a bit aggressive, but that was what we did in this one. And we have also created, as a benchmark, a simple earnings surprise strategy. And that is the earnings surprise strategy is represented by the blue lines, and the earnings surprise, the blue line, and the RavenPack earnings sentiment indicator is represented by the red line. And we have divided it into 4 different universes. We looked at US large cap, or Russell 1000, US small cap, Russell 2000, and the European equivalents. And as we can see, we are outperforming in 3 out of 4 of the universes. And you may ask why that is. Of course, we're looking a little bit more broadly. We're not just looking at above or below expectation, but we are also looking at the news around the surprise. So there will be guidance, and there will be other things also leading up to the earnings itself. So we are able to look more broadly at news surrounding earnings. One of the other things that we're finding is that if we look at this traditional earnings database, well, we actually generally have better coverage. So if you look at the overlap between what we have in our portfolios name-wise versus what we have in the portfolios for earnings surprise, we actually see fairly low overlap in the actual companies we have in there. So for instance, in the US, it's about 40% overlap, where in Europe, it's only 10 to 20% overlap. So there's generally better coverage around in the news than you have in these databases. Plus also we may, because they only trade on the surprise, they can only enter the portfolio on that particular day, but we are also trading around the earnings day, so there will be a little bit less overlap there as well. And we're also finding, because we look more broadly, that we don't always agree on sign. So only in about 65 to 70% of the time we agree on the direction of the trade when we have an overlap in the position, in the holding. So all of those things contribute to seeing slightly or different performance across news versus traditional consensus or estimates database. And finally, of course, we're also seeing actually that it might actually be an idea to mix the two together, because the two strategies hold fairly low correlation. So that's kind of like just the baseline signal. The idea here is really to see, can we increase the portfolio size by trading on related companies? So this is kind of just to create a benchmark signal to use in the next step. And of course, one of the challenges is that we have relatively high turnover with news, higher turnover than what you see with traditional databases. And as we dig deeper and try to go thematic, we also end up with smaller portfolios. Of course, you can do multiple themes and combine them together to get a bigger portfolio, but now we're just focusing on earnings, so we have a relatively small portfolio on average. So one way of doing it is, of course, just to extend the holding period. That will make your portfolios bigger. And we try to do that first. And as you can see here, of course, you will get lower information ratio. But you keep on having a higher information ratio throughout as compared to an earnings consensus database. You do, of course, get bigger portfolios out of it. And that's obviously nice to see, as expected as well. Turnover-wise, we are very similar. Pretty high turnover for the one-day holding period. And we get down to about 2 weeks holding periods on average as we increase the holding periods to, or force a holding period of 1 month. There's obviously some canceling out, and that's why on average we get about 2 weeks. So let's try and move on to another way of potentially doing bigger portfolios. And I'll kind of, that's my last slide before I just round up with some of the things that we're currently looking into. So here we have taken that same exact indicator and said, okay, instead of just trading the company itself, can we trade the suppliers of the company and the competitors of the company? And we have identified these suppliers and companies that we wanted to trade, building networks. So looking only at the ones that were most central to the network. Which ones are the most important suppliers? Which ones are the most important competitors? And what we find is that, yes, it seems as if there are predictive power in trading on news unrelated entities. We of course don't get as high information ratios as we did for the original signal, but we are still able to achieve information ratios of around 1 trading on these related entities. And if you look at the portfolio size in particular, we're able to significantly increase the portfolio. So the blue line is really just trading the company with the news itself, where the red lines are really also looking at suppliers and competitors. And on average, you have about 5 times bigger portfolios by trading across the supply chain. And that is obviously very attractive. You have more scalable strategies. You are more likely to see overlap from one day to the next, so it may help you reduce turnover and so on. So a lot of benefits there. We are continuing, can you say, our research. It's really still at its early stages, and we are planning to do a lot more research looking at related entities and also trying to, as I mentioned before, look at co-mention analytics as well as part of that. Other things that we're also interested in at the moment and where we're doing research is for point of sale data. So that's obviously another way of looking at revenues and growth of companies and earnings and so on. And we're seeing some very interesting things there as well. And you will definitely see much more coming out of the data science team looking at payments data. And of course, other ways of looking at earnings is going deeper into earnings call transcripts and reports. So that's also some of the things that we are planning to do in the future. And then of course also just moving beyond earnings and going in more broadly in the RavenPack taxonomy to help address turnover issues and scalability of strategies. That's it. Questions? I don't know if we have time. I ran a little bit over.
Yeah, we probably have time for just a couple questions. One over there.
Number one is, how do you define the importance of the buyers and the competitors? And the second question is there a lagging period when you do this model,
Yeah.
based on the score, and how do you quantify when you're going to make it
I think importance of relationship is a little tricky. For this analysis, we've been using Revere FactSet data. They do have a score that will tell you how important it is in terms of the revenue streams that they share, but it's very infrequent. So so we have tried to look at other ways of potentially looking at the strength. And one of the things that we did was really just looking at centrality of networks and only trading on the ones that were most central. But we have also been looking at whether we could do something statistically with co-integration, or also the idea is that we wanted to use co-mention networks for it. So if companies tend to get mentioned more in the news together, that relationship may be perceived stronger. But we haven't quite gotten to that part yet. We did a little bit, but of course it's a noisy measure, so we wanted to work a little bit with refining our co-mention score before we really started to dig into that part. But it is, of course, if you have a stronger relationship, we would expect to see stronger spillover effects. And in terms of lag, what we're doing is that we are taking the signal of your target company today and basically trading that on related entities tomorrow. So we enter at close the following day, and then in this particular picture is just holding for one day, but we're also looking over longer horizons, and that will be part of the next paper that we will produce. And we are seeing that signals tends to decay a little bit slower across the supply chain than for companies themselves. So you can definitely trade also, let's say, weekly, a couple of weeks on this type of information.
You have one more question?
So you showed the result of US small cap versus European small cap, and they were different. And I was wondering if you did any analysis using RavenPack data, which can tell us why those differences were there.
We haven't looked specifically in why they're different from a news perspective, but you can perhaps see that there are, if as you go more global, you will see that the type of news categories can differ. But here specifically, we focus on earnings, so that shouldn't really be the case here. But one of the things that you will see is, of course, like with any other data set, you tend to have more information in the US than you have on Europe, and both across single companies, but also can you say in the cross section. So generally, I would say U.S. markets is pretty strong for trading on news. From that point of view, of course, you have some other challenges in the market also being more efficient, so signals decay faster. But in Europe, you may have less strong signals on average, but they decay more slowly, so there's other benefits there.
Great. Peter, thank you very much. This is very exciting.